Great rewards don't wait, so why should you? Through the Invigor Book and Buy Grower program, you could earn a $30 per bag rebate when you book all of your Invigor hybrid canola by November 14th. Talk to your retailer. Terms and conditions apply.
Let's talk markets. We're joined right now by Tommy Grisafi of Ag Bull Trading and Ag Bull Media. Tommy, how we doing?
I'm doing well. Looking at my phone, just making sure I'm not missing anything because we have an action-packed world going on, my friend. So where should we start?
Well, let's start on soybeans. We saw a report this morning that China has bought 3 cargoes of beans. It's not a lot, but some would say, hey, it's a start. But the bean market opened the day trading down. Just so everybody knows, we're recording this on Wednesday morning. The market is currently down. Why?
Because they could have bought, the way the bean market rallied from last week to this week, they could have bought 30 cargoes for that rally, and 3 is not going to get it done. They could buy 3 every day for 20 days. The truth is they have to buy some. Half is a pretty strong. There's a very much a good chance they have to buy beans from us November, December, January, just to fill that gap between now and South America. So if they say, oh, China's going to buy 10. They used to buy 20. It's a lose. So if you know how to do the math, and there's some really smart people out here who know how to do the math, and they're like, wait, this year they bought this much. That year they bought this much.
Yeah.
Now they're going to cut a deal, and our administration is going to come out and act like it's the biggest deal since sliced bread. And if you're smart, like that deal yesterday with Japan signed a whopper of a deal. It was less than they did the year before.
Yeah, it was $8 billion in egg commodities, and that's what they've been. That's not
right. Trump got a putter, and Rollins got a tweet. Right. It's I don't want to say fake news, but it's entertaining here. So if you're the reason I was laughing when we started recording was a dear friend of mine from Chicago, PJ Quaid. He's a big options broker. He said, well, it hit the mainstream. His mom's older. He said, my mom just called me and said China's buying soybeans. I mean, that's all American news is talking about, how Trump ruined the soybean farmer's life. The American news isn't talking about that soybeans are $1 higher than where they were a year ago. They're just saying and the truth is what's hurting farmers all across the world isn't necessarily the price of the good. It's the inputs, which you talk about on your show all the time, fertilizer and everything else. So the headlines are soybeans. The Rollins tweets or whatever, the true socials from the president are they actually get people like my parents who are 84. My father told me, I heard Trump hurt the cattlemen real bad. And I said, did the media forget to tell you that the cattlemen just had the biggest 5-year run in history? So we pulled down 5 days for wrong reasons, right? Mean true social tweets. But the truth is the cash market will take off. And you're going to hear that 240 traded in the South, and that they weren't giving their cattle away. And it's let the markets work.
Yeah.
It's something I'm sure your listeners feel frustration because I know a long time ago when you had the Canadian wheat board and everything else, you're old enough and your listeners are old enough to remember all those days, right?
Yep.
So don't depend on our markets.
Yeah, we don't need the government really intervening too much here because it always seems to end up in some sort of a mess. And what's interesting about the beef one is on a couple fronts, the president claiming that, he's the reason why ranchers are making so much money right now. Not true. But at the same time, also, I'm not sure 80,000 tons of beef coming in from Argentina fixes the situation either. So there's an overreaction maybe on the producer side. This is really a situation where it didn't need to happen. I think that's the frustrating thing. And it's had an impact on the markets as they've been swinging. We're up pretty considerably today, but we've had some pretty significant down days as well.
Yeah, there's it's a horrible story and maybe a horrible analogy, but there was a concert in America, and I can't remember the band. I want to say Queensryche, but I could be wrong. But there was a fireworks, the techno show at the concert, and there was plenty of room for people to get out. But a fire burst out at a theater, and people trampled each other, and a lot of people died. One of the biggest disasters in recent American history at a theater. And it was all because they couldn't get out of the door fast enough in the panic. And that's the exact same thing, my friend, that happened to the feeder cattle market. We spent 4 or 5 years building up all this energy to let everyone in this market and have record open interest. How many times did you hear analysts come on your show and say, we have record open interest? We traded big volume in the feeder cattle. When you gap open lower and you lock limit, you create a whole nother market, which is a panic market. And when you're locked limit, you no longer allow in America LRP to trade, which is the insurance product that the government issues. They need the futures and options market for that product to work well. So then we have extended limits. Well, we open for a few minutes and we lock limit again, especially in the back months. We had aggressive selling in the front months, but the back months we're trading way lower. Now, what maybe your viewers and listeners don't realize is when we were limit down the other day, we were really another 12, 11, 10, 11, $12 lower in feeder cattle. There were trades you could do. So if you sold at limit down, there were things you could do in the options market to actually buy it $10 lower than that. That's what type of pain and panic happened. And the analogy of the theater in that concert, 20 years ago, it's happened several times here in America where there's a concert, something happens, and people can't get out. And so the function of the market is to have buyers and sellers, speculators and hedgers. When that system freezes up, and they don't let you out, kind of like I remember on 9/11 here in America, another bad event. After this, we got to talk happy stories. But I couldn't get out of some positions I had because the markets were closed, and it's a very poor feeling. That's why knuckleheads like me and other people are always saying, hey, if you're going to be long cash cattle or you're going to be long futures, don't be afraid to throw some puts under there and buy that insurance. Don't be afraid to buy insurance. We pretend we're commodities brokers, Shaun. We're really insurance salesmen.
Yeah.
We're always asking you to be insurance people. And we're acting like we're traders. I mean, I actually trade. I'm very involved in this cattle market. Some days are really good. Some days aren't. But in general, we're selling insurance. We're asking people to buy the insurance, buy the crop insurance, buy the LRP, buy the put. And these puts help people a lot, but not as much as just a good sale or something else,
Well, and the reality is that the consumer has been saying it does feel a little bit unbelievable, but the data is there. The consumer has been saying, what, I know prices are high, but I still have a taste for beef. I'm willing to pay these prices, and so it's really a poor situation for producers who are trying to risk manage and trying to steer through this. Like, what do they do right? If you're running a feed yard, what do you do right now from a hedging perspective?
That's a great question. Before this all happened, we should have. You got to have your banker on board, right? So where do you get the money? Well, people have money on their own, but then they have lines of credit from bankers, and you have to have your banker on board. You can't run 1,000 head of cattle, say I may need a few $100,000, and then find out you need 400, 600, 800 margin. And I don't know how to say this nicely, but for some reason, in the banker's mind, when you're sending in margin money, they look at those as losses. And there's always some banker who will go tell a farmer or rancher, I work with plenty of guys who aren't sending in money like you. Then that rancher then lifts those hedges and says, I'm just going to, and they're cowboys, right? You know what a cowboy looks like. These boys and girls take a lot of risk. So they start taking more risk, and as the market keeps going up, they get lulled into being comfortable. So what do you tell someone? That bad decisions made during good times will come back to haunt you when things change. No different than the arrogance and the cavalier attitude of American farmers and farmers around the world when the price of grains exploded during the Ukraine war, especially the stuff I'm familiar with in North Dakota, your edible beans, your sunflower seeds, any oil from canola. Canola went nuts. And lake houses were being bought, and they were fighting over who could buy the biggest engine in the boat. Now all of a sudden, the same farmers are having a hard time getting operating. Those were bad decisions made during good times. So if you make bad decisions during good times, when a bad time happens, and definitely that True Social post was not a highlight of American history in ranching. Now, there's more background on the why maybe the president did that, and I don't think we want to go into that inside baseball. But I will say this, is that someone might have hurt his feelings and disrespected him, and that was a signal to the cattle industry and different people. Now, if you think the cattle industry is scared, you should see the memes coming out of the hog industry, where the hog industry posts those things on the internet saying, just please don't tweet about us. Please, we're doing okay. We promise we'll behave. We'll stay in the White House for the full meeting.
Yeah, hogs are hiding in the corner. So
they are.
If you look at the grain market and you look at corn right now, of course, we've had quite a wild ride through this year when it comes to yield expectations and the surprise to the upside when it comes to the acre. What are you telling clients right now when it comes to the corn market?
Well, a lot of my clients are up north in North Dakota, and we're going to focus on the basis. They're not done harvesting corn. Folks have done what they need to do in beans. They either could store them or couldn't store them. They either paid for storage, bought futures, bought options. Now moving to corn, what we're talking about is we want to see this cash market improve. Sure, we're getting a futures rally, but we're not quite getting the cash markets weak, which is still sending a signal that we have too much corn. And there are a group of people here in America who say the USDA's numbers are way off. I could kind of start to join that party a little bit just because we had too much disease pressure in Iowa. And so we're waiting for this big, let's call it the January crop report, which, Shaun, at this point, this data could be so skewed. If your big hope is that the government tells the truth in January, you may be off a little bit. So we got to go back to the old school basics of, listen, you could deliver corn within 25, 50 miles of your house. What are the cash markets telling you? Have a good relationship with your local elevators. And then you look at those carries. We have great carry in the market, but it costs money. You know, we have a Fed meeting here today in America, and we're going to lower rates a quarter, but they are still pretty much double what they were a few years ago. And so it costs money to carry grain. It costs money to put grain in a bin and then take it out. You put 100,000 bushels of corn in a bin. You don't get 100,000 bushels out. You know, stuff happens to the grain. So we want to be aware of that. So what I ask people, regardless of the carry, regardless of the futures prices, when do you need money? Because in the end, a farmer's going to make a decision and say, I'm selling grain because I need money. And I'd like my farmers to be flush with cash or have more cash than normal come Jan, Feb. So Dec, Jan, Feb, we want grain flowing. We're selling March. We're selling calls on top of March if if we're comfortable doing that. Of course, that has its own risk. But we're selling the carry. And if they don't want to make a sale, we've rallied enough that we're willing to protect this price. We've actually hit some decent prices where we took out that 4th of July high here in corn. So technically, we're turning up. I did a video this morning with my friend Carrie Artek, and the soybean chart turned up wonderfully. Technically, it looks good. The corn chart technically looks good. But you know what? 10 days ago, the feeder chart looked good technically. So every ship at the bottom of the ocean has a chart room, my friend.
I love that. And if you need, if you don't have the storage, sell the crop, buy calls into the future. Is that a strategy to participate in the upside if you believe that we're going higher?
Yeah, absolutely. Yeah, you can sell crop by calls. You can sell crop by call spread. Some people sell crop and buy futures. They're comfortable with that. We've gotten to a level in the beans where I wouldn't tell a client, hey, we've just rallied $1, sell your crop by the futures. I would say the next dollar in beans could be either way. We are fair and balanced. We can go $1 lower, we can go $1 higher. But I still believe these markets with the South American weather problem could be explosive. We did have China commit to a few cargoes, as we talked about earlier in the show, but that's silly. That's like saying we're going to buy 1/10 of 1% of our beef needs from another country. I mean, it's nothing. It's a headline. And it's a feel-good moment. So right now, government's still closed here in America. The farmer shouldn't be too mad about it. We just had one of our biggest moves in the last few years here while the government's shut. They say when the government opens, we're going to see instant money back to the farmer. What that does here in the States is the farmer should be selling, the farmer should be protecting, but when they get that government money right into Thanksgiving and Christmas, they'll shut those bin doors, and you might see a big basis pop right into a cold weather movement. You get some cold weather into Christmas, and you might see a 20-cent pop in basis. And I'm going to ask my clients, sell that hot cash market, let's get out of what we have in hedges or protection or whatever they're working on my end, and let's cash flow. The ultimate art of the grain trading deal is the cash sale. We could trade futures, we could trade options, we could do this. Nobody gets paid until a cash sale happens, and that's how you pay back operating.
Yep. It's and if that money does go out, one of the worries that I have is we don't see those input prices that we've been so concerned about that is creating that negative margin. We don't see those input prices pull back. And that's something I'm pretty concerned about here on this 26 crop indeed. We've been talking to Tommy Grisafi. He is with Ag Bull Trading and Ag Bull Media. His website is agbull.com. Tommy, thanks a lot for joining us here to talk markets today on RealAg Radio.
Thank you, my friend.
For the latest ag news, agronomic advice, and more, check out realagriculture.com and RealAg Radio.